Red days ahead in the crypto market. Today we're going to be breaking down why Bitcoin could be falling off a bit of a cliff, or is it? We'll give you guys some insight on it. You don't want to miss it. My name is Paul Barron. Welcome back into Tech Path. I do want to thank our sponsor today, and that is Coinbase, a centralized exchange for you guys to get started. Maybe this is the time that you actually enter into crypto because there are some deals. And here is an opportunity to, of course, get into the one place that I think is the most secure out there in terms of an exchange. Future of money is here, the most trusted place for people and businesses to buy and sell crypto. So check it out. Use our link down below. It's going to give you $200 in crypto to get started. So go from there. Let's go over to a few topics today because there's a lot happening right now that could really start to set the tone for situations in the market as it is. The first thing, of course, I'll hit on is the Mag 7 erased another $550 billion of market cap today. And NVIDIA is on track for its largest daily drop since April. So if you're looking at AI as the leader of where the market could go, and it's still possible that we may see a resurgence here. I think a lot of this will have to do with how the Fed reacts, how markets react in the fourth quarter. And all of this is really kind of coming in on one major data point right now, and that's going to be the jobs number reporting on Friday. There are some things coming out, though, that are significant on that. I'll get to that in a second. NVIDIA stock, though, has now erased $360 billion of market cap today, including its after-hours move. So continuing its downtrend here. And I want to go to a clip real quick because there's people that are looking at this market right now and considering, is this the correction that many people have been talking about, or is this just a little bit of a bump in the road? Take a look.
So we're at a pivot point in the economy where the Fed is obviously moving in a different direction, where things are clearly softening. You look at the numbers yesterday, the beige book and employment. So whenever you get to a pivot point in the economy, you're going to see more volatility, and it's just normal. It's the market kind of flushing and working its way through in terms of what's going to happen now. So I think a lot of this is just normal market reaction to a changing macro backdrop. And the volatility has been extremely low in the last couple of years.
Well, so what are you telling your clients, though? You have a lot of high net worth clients in the world who are all trying to figure out what they're supposed to do with their money. Some of them have cash on the sidelines, and they're sitting around. And some of them are asking, hopefully they're not asking, are we sitting in September of 2008? But we're also at an election year, by the way, also happened during 2008, adds to the volatility. You know, how bad is it out there? Is this a moment to be stepping back in? Is it a moment to wait because you think that things are going to be crazy?
Well, one more factor. If you go back to 11, 12, where there was a lot of volatility and a lot of macro uncertainty, the S&P's up almost 500% since then. So what we tell our clients, and we have the best advisors, private advisors in the industry, they have a long-term plan in place with clients, and they say stay steady with the plan.
All right, so are you staying steady with the plan? I think the key here, if you're in crypto, you've probably seen a lot of people that you know get washed out. And during this run up to 70K, back down here into what could be maybe a 53K range coming for Bitcoin. And obviously we saw Ethereum dip into 2,300. So a lot of factors are playing into this. Is this the sign that starts to get that corrected market washed out right before maybe a potential run? Or have we not seen the bull run continue on? Are we in a position maybe where the bull run does not continue through? There's a lot of factors that play into this, including not only the election side, the landscape, but the real question I have is how much pressure have these high interest rates truly caused the economy? Because remember, all this is trickled down into eventually someone's back pocket. And one of the things that is leaking out right now, this came in from Kalshi, which is a predictive market out there. And again, this is not official data, but it is anticipating that August job numbers could have tanked dramatically. We'll know this tomorrow when the non-farm payroll jobs come in. And if we do see an under, what they're saying is an under 160 in terms of jobs potential, that would be an absolute stunner for the markets. And the question is whether or not the markets will even react to this, or how will the Fed react to this? Have they pressured too far in terms of these high interest rates going forward? So a lot really at stake right now based on this jobs. And this is something I've been talking about for weeks, is that this jobs number coming out in early September will be the turning point for this economy. And it will either tell us that we've had two things happen. The issue one is we've pressed too hard too long, and we may not be able to recover out of this, and this soft landing, or so-called soft landing, could get much more bumpier than many people expect. Or it's going to come in soft and we will continue to see the quarter points adjustments and a very nice smooth glide path for the economy here in the United States as we lead into the election. All of that being said, you've got to look at where Bitcoin and Ethereum both are going. So Bitcoin and ETH outflow streak may not be over yet. So this is a big indicator, even though I don't think it is the one indicator that everybody should be looking at. But ETH is facing a perfect storm of investor anxiety, market turmoil, obviously the legislative side of this thing, as well as the situation on the political front. In a single day, Bitcoin ETF hammers millions and ETH ETF suffered equally severe hits. And of course, if you look at this right now, they suffered a brutal almost 38 million in outflows, marking the sixth straight day of decline. And we've seen more outflows than what we saw in the last couple of days. There are and have been significant outflow days for Bitcoin. Obviously not enough history here on the ETH ETF, but it is one that we're watching. The ETH ETF, though, this is the one surprise to me for the year, is that the underperformance of the ETH ETF is something that I think is significant, and it's also maybe shown a lot more significant around where Ethereum's price is going, obviously with the adjustment we've seen down to 2,300. But ETH has underperformed now Bitcoin by 44% since the switch to proof of stake. This is all coming in from long term. Next week will mark 2 years since the ETH switch to proof of stake. And ETH has still been sleeping on the sidelines, down 44% for Bitcoin. Analysts also talked about the continued underperformance, even though the spot ETF were approved. We thought there might be that as the catalyst, much like what they were the catalyst for Bitcoin to move up to an all-time high this year. So it's definitely not in a position. I think the real question is, what other alternative is out there in terms of altcoins that you might feel good with, whether it's a Solana, an Avalanche, or others, Chainlink, many of these that are starting to move into maybe the prime position for some of the money on the sideline. You got to think about what Cramer is talking about, and of course he now is sparking a little bit of a Bitcoin rebound on optimism with a little bit of a pessimistic tweet. And the angle on this, if you guys know, is just do the inverse of Cramer and you're going to be fine. And you never know. I mean, the things he's talking about in his tweet are not necessarily, let me zoom in on that a little bit, not a market-wide sell-off is what he's saying. It's the sell-off of anything having to do with AI, data center computing, as well as housing, oil, and some companies that have leveraged infrastructure. Okay, well, that's a lot in terms of economic power, and it's definitely a lot that's led the market out over the last 24 months, which has really been the Magnificent Seven. So if that in fact isn't a sell-off, then you're going to have a trickle-down effect in a lot of different markets that may not necessarily be in that area. And that could get into regional banking, which I think is going to be hit even harder. Then you get into everything from utilities, and you just start going down the litany of potential categories and sectors that get hit. The other thing that plays into this, of course, is where's the election setting right now. Trump continues to climb on Polymarket. This is the unofficial poll of people who are putting money on these predictive markets, not in the United States, but putting money on these predictive markets as to who they think will win the election. And they are a small pool, but it is interesting that it does flow a little bit with where the dynamics of sentiment have been flowing on much of what's happening here in the United States. And most of this has been happening since VP Harris has started to issue her policies, which has been everything from capital gains tax on unrealized to all sorts of scenarios that play into immigration, where we will be going with how taxes are going to be done, you know, from the working class all the way up to the billionaires. So I think there's a lot here in a position right now that does affect what's happening in the crypto markets. And of course, you've got Trump saying that he would bring in, well, if he brings in Musk, then this would be interesting because he's pretty effective and efficient at doing things. I just don't think we will see that happen because that would be a train wreck for anybody in any government agency out there. I think if Elon Musk was in a position to where he could start cutting jobs, even though it wouldn't be a bad thing for the U.S. government to start cutting jobs, that would help a little bit there. Here is Khanna. This is a clip talking about the unrealized gains tax that Harris is proposing. Listen to what he had to say.
Let me tell you why I don't think a blanket tax on unrealized gain is a good thing. I mean, let's say you're an entrepreneur. you create a company. It gets to 100 million or 200 million on paper. Now, if you're taxing that, you're probably going to force that person to sell it. They're probably going to sell it to private equity. Do you really want the entrepreneurs to be forced to sell their companies to larger institutions and to decline in value? I don't think that that's what you want for a startup
ecosystem. That would be the unintended consequence. Jeff Bezos wouldn't have to do that. They're going after these very, I think the whole policy is demagoguing to go after these people that they say pay less of a tax rate than their maid does, and they have billions of dollars.
I get why, but this is not the right way to do it. And also, 95% of investments in startups fail, and so you're going to disincentivize investments in those startups. But here's what I think we can go after. You have folks, okay, they start to have capital appreciation, and then instead of realizing that, they take out a loan, which I call backdoor realization, to fund their entire lifestyle. They never pay tax on that. Then, when they die, they pass that money on to their heirs, and their kids never pay tax on that.
All right, so what Khanna just said, just so everybody's aware, he's a Democrat. So he's making sense in the state of the fact that this would thwart, I think, innovation around new company startups, et cetera. And we're talking about companies and people that own a lot of these multi-billion-dollar companies in many cases. There would be affected on kind of an unrealized capital gain. But the real thing he said, I think, would be a much bigger hit to the economy, because now he's starting to look at real estate investors, which are typically the number one, if you want to call them, culprit of utilizing these loans that go against property, all sorts of strategies that are built around this model where instead of taking gains, you take a loan out on it, and you're constantly, and of course the loan comes against a piece of property that is being held, and you're in essence taking gains on all of that without paying taxes. That's exactly what Rich Dad Poor Dad preaches. It's what almost every finance guy out there preaches in terms of strategy of building wealth. That would most likely come down into the working class, because this will affect even small I think would affect that. What he's proposing would affect even small retail investors. And think about if you're owning crypto and you want to just hold your Bitcoin forever and just take a loan out on it. That would be also a good example of how this would affect that kind of strategy. So if that one were to come through, I think it would create a much broader swath in society. That would be a bigger concern going forward. I've got another clip here because this gets into Mark Cuban talking about Kamala's business prowess. Take a look.
Kamala Harris is pro-business. This is Kamala Harris's campaign. It's not Joe Biden's campaign, but she's going center 100%. I mean, literally, if you read the transcript of her speech yesterday, she's talked more about entrepreneurs and helping them have access to investment and making it easier for people to invest in startups than any president that I've ever heard talk about startups and entrepreneurs.
So to the
and
extent
literally, she listens, right? This is not something where it's just her policy team comes out and says, Mark, or whoever, let's hope this works. No, she's like, list me things you think we should be talking about. You're the entrepreneur. You invest in more startups than anybody I know. What do you think we should be doing, and what's going to increase the number of investments in startups? And I've had other conversations with their team where it's like, I literally go through and say, the higher the capital gains tax, the more difficult it is to invest in riskier investments. Right. And the people who have the hardest time getting risk capital are women, people of color, young kids that are coming out of colleges. Exactly. The people you want to take risk on, the higher the cap gains rate, the harder it is to invest in them for obvious reasons.
Now, Cuban is right there. I mean, that is a good example. Capital flow into minorities, into women-owned companies, probably the lowest that I've seen around VCs in a decade. So it is a reality. I was looking at the statement from the Harris campaign, and this is kind of, I think, what they're referencing. So they want to enable a record 25 million small business applications in the next 4 years, expand the startup expense deduction from 5K to 50K. That would be good, but remember, startups most of the time do not make money for, in most cases, 5 to 7 years. So that is just really an extension on the tax breaks that you're having. I guess it would depend on the details of that. Provide resources for small businesses. That's already really out there today. And then unnecessary red tape that makes it harder for small business to operate and expand. I would need to see the list of that because there are a lot of unnecessary things within city, state, county, government that would not be directed by the federal government. And if, other than taxes, that would really play into this. I would have to see the detail behind this. It's great talking points, but unless you showed me something, I don't know that I would necessarily agree with that until I see it. Further into this is where we get into some crazy stuff that's going on right now, which could affect the crypto markets. And this, of course, is President Putin coming in and saying he's supporting Kamala. And I don't know if this is a gaslight, if this is, I want to support the weakest candidate. I mean, because I can't imagine that the Russians would want to support a strong candidate for America if based on what we're seeing so far. So very interesting statements out there right now. And if you look at what else is happening right now in the market and around just kind of this whole idea, this was a news story that just hit. And this is the Department of Justice now alleging that there is basically an RT-like media company that has been funded here in the U.S. And it was came under a company called Tenet. And they went out basically to right-wing influencers, right, center, whatever you might want to call them, but these are typical names and people that have been around for quite some time, hired them to do content, but the question is whether or not they control the content. So it's a very intriguing thing. The reason this is important is because imagine if something like this from a nation state came into the crypto markets or into the finance markets and started to influence around certain investments that might be better for nation states outside the United States. Bitcoin could be gold, could be all sorts of things that are much more directed away from the US dollar. We could be seeing a lot of those kind of scenarios. So this is getting to be very geopolitical, I think, right now as we start to see how these markets play out. And I think now crypto is probably at the front of the ticket more so than ever. So it's something I'm keeping an eye on for sure. Good news things is that Mastercard now is enabling non-custodial crypto spending in a new partnership. A couple of points within this article that are kind of interesting right here. Let me kind of zoom in on that. This is in alliance. I know you guys are going to say, well, this is Mercurio. Yes, I know there's fees. Yes, but it is a collaboration through Mercurio where they're eliminating the traditional barriers between blockchain and conventional payments, meaning you'd be able to use that within maybe a Mastercard. I don't think that is going to be the solution. This is probably just a Band-Aid on the payment systems as we see some of this DeFi potentially eventually connect. But I think the key here is that maybe Mastercard is trying to learn more of how to do this probably on their own and get much more into digital payments, digital assets, et cetera. So that's the good side of the potential partnership. The other thing, Uniswap's fine in the latest CFTC showdown over illegal offerings. This, of course, has come in kind of interesting. The settlement is $175,000, which concludes the CFTC's proceedings in the case. This is part of the agreement that Uniswap entered into in a no admit, no deny kind of settlement, which is hey, we're not saying we did anything wrong. We're not saying that we didn't everything right. So this is a somewhat of a win in the sense that Uniswap, but I think we're going to see regulatory alignment in DC soon. Obviously, this will all depend upon the administration, and it will depend on how the Senate shakes out on pro-crypto or not, because there still are quite a few Democrats that are now starting to cross that aisle that are pro-digital assets. So we're watching this one very closely. We'll continue to report on all this for you guys. And if you are not in our Diamond Circle, make sure and get in on that. By the way, as I have told you guys before, if you're in the Diamond Circle, we do special content over there that does not come here on YouTube. I do analysis, additional content, podcasts, etc. It's only available over there. So make sure and click the link down below and join. Follow me out there on X, @Paul Barron. We'll catch you next time right here on TechPath.